G'day guys, Jason here. Hey, listen, I want to talk to you about taxes today. There's two taxes as a property investor we're exposed to, and the property investors who understand and know how to minimise these taxes or understand them when they're building a property portfolio end up with more money in their pocket and less surprises when it comes to their cash flow. Let's go through these two today and maybe come up with a few strategies how to manage them as a professional property investor. Let's have a look at stamp duty. Stamp duty is applied all around Australia when you purchase a property, but all stamp duties aren't created equal, and there's a way to understand stamp duty in the different states and the way we purchase properties to minimise that so you end up with more cash in your pocket. Let's have a look. Let's have a look at the states around Australia and have a look at the different numbers of stamp duty. If you purchase a property, let's say $600,000 property in WA, 23 grand of stamp duty, 22 grand of stamp duty in Queensland, 29 in the Northern Territory, 32 in SA, 23 Canberra is the winner of the lowest stamp duty in Australia at this point in time at 18, 33 in Victoria, 23 in Tasmania. Now, when you're building a property portfolio, sometimes you might need to make your cash go a bit further and make sure that you're diversifying and investing in different states. So this understanding with stamp duty is always important to do your research and understand how much your costs might be. So there you go. Different states have different stamp duties. How can we minimise those is another good question. Here's a way you can minimise it. If you purchase some land for $300 and you build a property or a building for $300, you end up with a $600,000 property all up. However, the stamp duty is calculated on the land portion, not the whole building, and that could be an advantage for you as a property investor. More cash in your pocket, maybe end up with the deal that you need. 10 grand in WA compared to 23, $13,000 saving, 11, 10, and so on. So guys, when you're thinking about building a property portfolio, and sometimes you've only got enough money just to go a certain distance, maybe thinking about the type of property and the location of the property for this purchase or the next one, building a property portfolio is really, really important. So understand stamp duty. We know how to manage it, calculate it, and strategize around it. The other one, land tax. Land tax is a state-based tax around Australia, and when you go over a certain threshold of calculation, depending on which state, of amount of land value you own, you will go into the land tax calculation where you will pay some land tax. How do we minimise that, or how do we pay no land tax? A few ways to do it. If you owned, let's say, 4 properties in New South Wales, all in one place, your land tax bill on average would be about $10,000 as a property investor. Now, 10 grand out of your pocket for land tax, that's a lot of dough when it comes to owning a property portfolio out of your cash flow. However, if you were smart and you owned 1 in New South Wales, 1 in Queensland, 1 in Victoria, and let's say 1 in WA, your land tax bill for the same value of properties would be 0. Minimising your land tax, maximising your exposure to growth and opportunity markets, and making sure that ultimately you end up with more cash in your pocket, not the government's pocket. So another way you can do that, diversify. You can own properties in different names. Okay, you and your spouse, 2 separate people, 2 separate land tax thresholds, and the same with some other companies and trust structures. They're owned separately. They're different calculations for different owners. So there's a few ways to minimise that, and there's one way to never pay land tax at this point in time. Up in good old Northern Territory, there's no land tax at all, but necessarily, is that the right place to invest? You need to make sure you have a good strategy. So guys, as a property investor, we need to know how to manage these taxes and duties so we end up with more money in our pocket. So there's a little tip for you today. Couple of ways to manage your taxes. So until we catch up with you in person, maybe at one of our property investment nights we hold all around the country, take care. Bye for now.